Hello, good morning. You're watching Market Cafe on ET Now with me, Vinny Motiwala, along with me, Shreyansi Singh as well. Shreyansi, very good morning to you as well. Let's look at what happened, in the couple of days that we have seen. Friday was a holiday for the Indian markets as well. So what is the handover overall that we've gotten from the US markets, the global markets? What are they looking like?
Absolutely. So it's very interesting what is happening, right? Because Wall Street is coming off a long sort of losing week for the major averages. And the 30 stock Dow, when you look at it, was down 0.9% thereabout, or just like about 1%. Last week, marking its worst performance since October. When you look at the S&P 500 as well, that saw a downtick of about 0.3% coming in. Nasdaq as well dropped over 1%. Investors took some profit in some market leaders as exceedingly high valuations have many concerns stocks could be due for a pullback after this year's rally. Now, 5 of the Magnificent 7 companies declined last week when you look at them, with Nvidia and Meta Platforms alone pulling away from the pack. So the February jobs data on Friday as well also gave investors mixed signals as to when the Federal Reserve could be expected to cut interest rates. More on that later, but investors will be seeking more signs of progress on inflation this week. So February's consumer and producer price indexes that are set to release Tuesday and Thursday respectively come after January's surprisingly hot report that dashed hopes of the path towards the Fed's 2% target will be easy. Now, traders will get their last major economic reports before Fed leaders convene for their March policy meeting. So this is particularly an important data set coming in. On the earnings front, of course, you've got the software platform Oracle that is set to report numbers after the bell. So those are some of the cues that we're looking at. When you look at European markets as well, the stock 600 index provisionally closed just a little bit higher, with sectors and major bourses trading in mixed territory. So when you look at financial services, they were up 1%, technology as well dropped 1.5%. When I'm looking at DAX as well, that saw a downtick of about 0.2% coming in, and CAC as well saw a downtick, similar downtick coming in, Vinny.
Absolutely, that's how we're seeing the global markets. But let's look at what, the Brent crude oil, WTI crude oil, that's been doing this morning as well. As of now, in terms of opening, a bit of a subduedness that we've seen for the Brent crude oil as well as the WTI crude oil prices. Brent crude oil has seen a downtick of almost 0.6% in trade. WTI crude oil, 0.7% trade, lower in trade today as well. Oil prices last week also posted a weekly loss that we saw in a decline that came in as China's demand is something that started weighing on the oil prices as well. So in terms of that, we are seeing Brent crude oil prices today trading below the $82 per barrel mark. WTI crude oil is just below the $78 per barrel mark as well. So yes, keeping an eye out on that. But let's look at what gold is doing as well. That seems to be marching a bit higher in trade, and gold prices $2,188 per ounce is what gold is trading at as of now. Slight bit of an uptick that we're seeing in the gold prices this morning as well, up 0.1%. Many US jobs data is something that is keeping the gold on the higher end as well. Early rate cuts, all those things that are keeping gold prices a bit higher today in this morning's trade as well.
Absolutely, and as promised, let's take a look at the US jobs data coming in. The US added 275,000 non-farm jobs in February. However, the unemployment rate rose to 3.9%. That figure is at a 2-year high. Wage growth was slower than expected. The data broadly positive for Fed officials looking to see the labor market holding up without creating inflationary pressures.
I'm shifting focus to Japan, where the economy has successfully averted a technical recession. Now, according to the revised official data, the economy has returned to the growth in October to December quarter last year, albeit private consumption has seen a bit of a decline. Japan's gross domestic product expanded by around 0.4% in the fourth quarter compared with a year earlier.
And shifting focus then, Saudi Arabia's state-owned oil giant Aramco has reported a 25% decline in profit to $121.3 billion on a year-on-year basis. Despite the earnings decline, the result still represents Aramco's second highest net income on record, far outpacing the profitability of its largest global peers. The company has boosted its mega dividend payout despite economic headwinds.
Moving on, we have some update that says that Sam Altman rejoins the OpenAI board and he has been brought back on the board of directors alongside 3 new members. The former CEO of the Bill and Melinda Gates Foundation, Sue Desmond-Hellmann, and the former executive vice president and general counsel at Sony Corporation, Nicole Seligman, and the chair of Instacart, Fiji Simo, who has also joined the board along with him. These are the 3 new members. Just 4 months ago, Altman was ousted from the board and briefly dismissed from his role as the company's CEO.
And India has signed a free trade agreement with a 4-member European bloc, EFTA, and will lift most import tariffs on industrial products. This will be in return of $100 billion investment from these countries spread over 15 years. The deal will also result in creation of 1 million jobs. India EFTA trade deal will also result into the entry of Swiss watches, chocolates into Indian market at lower prices. ET Now's Sumit Chaturvedi caught up in this exclusive interaction with Jan Christian Vestre, Minister of Trade and Industry, Norway, which is part of European Free Trade Association. Take a look.
The goal of 100 billion, that's an estimate, and that goes for all the EFTA countries together. We haven't split it into 4 countries. It's the EFTA as a whole, as one. But there are some really good investments already. Talking about Norway, we have investments worth approximately $25 billion in India already, and we expect this to grow, of course, rapidly over the next years because the Indian economy is growing extremely fast. It's right now the 5th biggest economy in the world. It's expected to be the 2nd or 3rd biggest economy. The GDP growth is tremendous, but also because this new agreement provides the ecosystem and the foundation and the framework to really make business happen. I think we will see investments in all kinds of sectors and combined sectors. Everywhere where there is an opportunity to create sustainable growth and new well-paying jobs, I think we will be there.
India is growing the largest big economy in the world. It shows the importance of India there.
Yeah, but of course, and I mean, India now is really the powerhouse in the world, not only because of your size and the economy and all the reforms here and everything that's ongoing, but also the role India is taking. We have seen it now in the G20, we have seen it through the leadership of the Prime Minister. It's really a reliable partner, and I would also say close friend. Our ties have been very close for the last 75 years, and with this new groundbreaking agreement, I'm pretty sure that our bonds will be stronger than ever before, and I can't wait to see what the future will bring.
Okay, on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more updates on the Asian markets, domestic market. What's that doing as well? We'll be back with all those updates. Welcome back. You're watching Market Cafe on ET Now. What interesting actually happened last week was in terms of the Tata stocks, because it seems like they actually added as much as to the company's value. Tata Group companies overall added 89,000 crores in value. Sumit, what's the update on this? Why was there a rally? What is the update coming in terms of Tata Sons as well? What's happening there?
Well, if you see, Tata Group stocks remained in focus in the last week. They have added around 89,000 crore rupees in the market value. The stocks that have added the most include the list of Tata Motors, which has added close to 22,500 crore rupees, and this is largely in the back of the demerger rally that we had seen. Then there is Tata Power, which added close to 15,300. Tata Investment and Tata Steel added anywhere between 9,000 to 11,000 crore rupees, while Tata Chemical added close to 8,800 crore rupees. Now, though in absolute terms, Tata Chemical might have added just 8,800 crore rupees, but in percentage terms, if you see, Tata Chemical share prices rose the most among the Tata Group companies last week. The share prices jumped nearly 36% last week, and this is the biggest weekly jump in the share prices of Tata Chemical that we have seen since May 1992. Back then, the share prices had increased around 47 odd percent. Currently, the stock is at record high. Now, what triggered this rally when it comes to Tata Chemical? Well, it's the news about the Tata Sons IPO, which is expected to hit the markets anytime in the next one and a half year. Now, Tata Chemical owns nearly 3% stake in Tata Sons, and this IPO could lead to value discovery of its stake in Tata Sons. Now, Tata Sons, as per analysts, is valued at around 17 to to 17.5 lakh crore rupees, but given the fact that it's a holding company, there will be a holding company discount. Now, if the holding company discount stands at around 30%, then Tata Sons' actual value on listing could be around 12.3 lakh crore rupees, while if the holding company discount stands at around 60 odd percent, then the value could be around 7 lakh crore rupees. Now, this means that Tata Chemicals' 3% stake in Tata Sons could be anywhere between 21,000 crore rupees to 37,000 crore rupees. Now, this means that the 21,000 crore rupees value of its stake in Tata Sons is nearly 63% of its total market capitalization, and hence we had seen this rally. Now, if the holding company discount is on the lower side at around 30 odd percent, then the actual value of its stake could be much more than the current market capitalization of Tata Chemical. But it remains to be seen whether Tata Sons IPO will hit the market or not, because what we understand is that RBI has declined the request of Tata Sons to give them an exemption from this IPO, but Tata Sons is considering various options which include corporate restructuring and also restructuring its liabilities to get a relaxation under RBI rules. So whether or not Tata Sons IPO hits the market or not, that will decide the rally in the share prices of Tata Chemical going forward.
Right, thanks Amit for those details. But the government also announced LPG price cuts of 100 rupees over the weekend. So while you're with us, talk to us about the impact coming in. What are the key negatives and positives as well, and how will this impact their profitability as well?
Well, if you see the LPG price cut of around 100 rupees per cylinder will be a direct hit on the profitability of the oil marketing companies, because if you see currently the under recoveries on LPG stands at around 150. Now, post this cut of around 100 rupees, that will increase to around 250 rupees per cylinder. Now, the earnings impact might not be visible in the fourth quarter of FY24, because in FY24 earlier, if you see oil marketing companies had over recoveries, and that's the reason this impact would be visible in this current financial year of FY24. Over recoveries means that earlier they were getting LPG at cheaper prices, but they were selling at a higher price. So there was some profit that was booked earlier, and hence the impact won't be visible in FY24. But if LPG prices sustain at current levels globally, then FY25 profitability could take a hit. However, on the positive side, if you see LPG prices usually fall in summer, if that happens, then the impact would be limited on the oil marketing companies. And in past, what we have seen is that any losses on LPG have been made good by the government, given the fact that LPG is a controlled product. So though interim budget does not account for any subsidy for FY25, but the final budget could account for. So at this moment, it's not clear whether there will be an impact or not. But if there is no subsidy burden taken by the government in the final budget, then definitely there could be some impact on the oil marketing companies. On the other side, if you see what Morgan Stanley is currently saying is, in the near term, conversations with investors point to skepticism about the diesel and gasoline, that is petrol fuel price cut going forward, given that elections are approaching. At current prices, if you see India's crude oil prices, India's retail fuel prices are benchmarking crude at around $90 per barrel. So Morgan Stanley is expecting a price cut of around 2 to 3 rupees per litre. Again, on the positive side, what we understand is that oil minister indicated that there won't be any price cut anytime soon, given the fact that the freight charges have recently gone up and oil marketing companies are still making losses when it comes to diesel sales. So it needs to be seen whether there will be any fuel price cut or not, because that will impact the profitability of the oil marketing companies as well.
Okay, Soumya, thank you so much for that update coming in both on Tata's as well as OMC's, what's happening on that front. But let's move on and also listen in to what the Petroleum Minister Hardeep Singh Puri, who says that Indian OMCs faced losses for not passing on the international price hikes to the consumers, and the centre had to eventually compensate these companies for majorly and the majority of the losses that they made. Listen in.
अंतर्राष्ट्रीय महिला दिवस पर उन्होंने एक और डिसीजन कन्वे किया कि एलपीजी सिलेंडर का दाम जो है वो 100 रुपए और कम किया जाएगा. When the international price went up, we allowed the price domestically only to go up by 70%. In other words, the rest of it was absorbed. इसका नतीजा क्या हुआ? इसका नतीजा ये हुआ कि जो हमारी कंपनीज हैं उन्होंने घाटा लिया. कितना घाटा? उनका रिपोर्टेड लॉस इज 28,000 करोड़ और हमें उस 28,000 करोड़ में से शायद 22,000 करोड़ we had to reimburse them because we want to keep our companies afloat, and the companies ultimately are answerable to their shareholders.
Well, that's the word coming in from the petroleum minister about the LPG prices. But let's keep it with the oil and gas space then. Sources tell ET Now that the matter concerning the exclusive marketing rights to the CGD companies is in court and government will be taking a decision after the court orders. My colleague Prakash is joining in with more details. Prakash?
Yes, sir. We are learning from our sources that the government is planning to amend PNGRB Act to bring in competition in the city gas distribution business. And efforts are being made to companies into city gas distribution business after charging them appropriate infra tariff. That will help in ensuring a better service to the consumer. Therefore, the process has been initiated to end exclusive marketing rights by amending existing regulation. However, this whole process will take time as this matter is in the court and anything in this regard can happen only after the court order. Some companies have approached court after the exclusive marketing rights period have already expired. It is important to note, as our sources are informing, that the Election Commission is going to announce election dates for the parliamentary election in the next few days. Therefore, proposed amendments on which the Petroleum Ministry is working can be implemented only after the new government sworn in. So it's an important development coming in, but the government has shown its intention that it wants to amend existing PNGRB Act to allow new companies to come into the existing company city gas distribution areas. Back to you.
Okay, let's move on. And Hardeep Singh Puri also spoke on the likelihood of the cut in petrol and diesel prices and gas distribution companies cutting rates. Listen in to what he had to say as well.
This decision is taken by the companies. मैं ये भी बता दूं आपको, ये जो और they have been good corporate citizens, अगर वो बढ़ा देते, कुछ सेक्टर में जो प्राइवेट सेक्टर के लोग थे, जब दाम कम हुए, OMCs ने अपने रिटेल बंक पे दाम कम किए, प्राइवेट सेक्टर ने नहीं किए, but then they also had a sense of introspection and they did it.
Well, let's move on then and get a little more stock specific. Sebi issued an interim order against JM Financial. The order bars the company from acting as the lead merger for public debt issues. Anurag Joshi is standing by to tell us more about this. What does the order say, Anurag?
The Securities and Exchange Board of India has barred JM Financial from accepting new mandates as a lead manager of public sale of bonds. For those bonds where JM Financial is a lead manager already, it can be in the role for a period of 60 days. Now, Sebi had conducted an investigation into issuance of debt securities related to the role of JM Financial, and it had found that JM Financial Products, which is a unit of JM Financial, had loaned money to investor clients, and on the day of the listing of the debt securities had bought these bonds from the investors at a loss, which were in turn sold to corporate investors. This Sebi has also observed is a form of incentive which this market regulator says is not allowed for financial intermediaries in the capital markets. Now, JM Financial Products was a counterparty for the trades of these individual investors and had provided money to these investors for subscribing to the issue. And JM Financial Products on the same day of the listing had offloaded at a loss, and a significant portion of the securities that it had acquired from these investors was sold to corporate investors. And Sebi had relied on trade data on the listing day from depositories for coming to this conclusion. And the data had also showed that a significant reduction in the holdings by the individual investors, and the retail holding for these bond issues had come down significantly as a result of the sale of the bonds by the individual investors due to this buyout of the securities by JM Financial Products.
Let's move on, and moving on to an exclusive story. Now, ET Now sources tell us that the Finance Ministry has asked the public sector banks to review gold loan portfolio, as few instances of non-compliances were found by the Department of Financial Services. My colleague Ankur Mishra is joining in with us to give us more details on that. Ankur?
Yes, sources say that Department of Financial Services has nudged public sector lenders to assess their gold loan portfolio. Now, why this has been done? We have been told that there has been few instances where discrepancies has been found by some of the lenders. However, the sources have clarified that there is no system level issue. Otherwise, the regulator would have come into action. This is more of a direction to public sector lenders to adhere to best practices and also assess the situation, find any discrepancy, if any is there in gold loan portfolio particularly. Now, this has come to light after a few of the instances which were found, and also gold loan prices have surged in near future. So the collateral which has been provided by the bank, is there proper or not? Has there been any evergreening which was done by any of the lenders? So all these directions has been given by the Finance Ministry to banks to review their own portfolio and check the situation, what is happening particularly in gold loans. Remember, there has been around 17% growth in gold loan portfolio if you talk about last year, and you also remember that Reserve Bank of India had given direction in the case of IIFL for not giving any incremental loan as far as gold loan portfolio is concerned. So all in all, it is a step by government so that the lenders can be nudged to adhere to best practices.
All right, thanks Ankur for those details, but let's slip into a short break, and when we come back, we'll take a look at some more stock-specific news.
Welcome back. You're watching Market Cafe on ET Now. Let's get more stock specifics. And the popular truck, bus, radial tire prices fell by nearly 2%, led by major players Apollo Tyres as well as JK Tyres. What's the detail coming in on this one? Ashisha is joining in with us. Ashisha, good morning.
Well, yes, tyre stocks will be in focus today, and that is because prices of TBR or truck bus radial have declined by nearly 1.5 to 2%. This price cut has been undertaken by leading players, the likes of JK Tyres and Apollo Tyres. Important to note that this price cut was led because of the price cut that was taken by industry leader MRF, and that is the reason price cuts have been followed. This is the second instance of price cut which has happened only in this segment, that is the TBR segment. And channel checks also indicate that demand continues to remain weak in the truck replacement segment. Just to give you a sense of the impact of price cut, JK Tyre generates about 54% revenue from this segment, MRF generates about 41%, Apollo Tyres at about 35%, and CEAT at about 31%. Remember, commodity prices have declined. Commodity prices of natural rubber have jumped nearly 11% on a sequential basis, and hence Nomura believes that if commodity prices of natural rubber were to sustain, margins of these companies will be impacted by as much as 100 basis points in the first quarter of FY25. So keep an eye out on all these tyre companies on account of price cuts that they've undertaken.
All right, thanks Ashisha for that update. Let's also take a look at the life insurance space then, where the retail APE has grown over 18% for the month of February. Private sector has grown over 20% as well. Gaurav is standing by with more details. Gaurav?
Yes, so life insurance companies are definitely going to be in focus because we have seen a strong set of numbers coming up in the month of February. So if we talk about retail APE growth, we have seen a growth of 18.1% for the month of February. Whereas if you look at the private sector companies specifically, they grew at 20.4% on a YoY basis in the month of February. If we have to name a few, we have got Max Life, Bajaj Allianz Life, ICICI Pru Life, where the companies have shown a growth almost of 34% on a YoY basis. Whereas we also have HDFC Life and SBI Life, where we saw a growth which was higher than 25% 13% on a YY basis in the month of February. On the other hand, we also have companies like LIC and SBI Sun Life, Aditya Birla Sun Life, where we saw LIC grown at 13% on a YY basis and AB Sun Life grew at 8.5%, which was quite lower than the industry average, is what we could say for the month of February at least. From here on, a company's outlook is also being a little bullish. So for example, for HDFC Life, if you look at the loan growth, that is definitely going to aid the target that they have for Q4 FY24. And on the other hand, they also are expecting a strong pickup in the non-par segment of their business. Let's also talk about ICICI Pru Life, because they believe now that even if we look at no growth on a YY basis for the month of March, they would still be able to achieve the 10% target of the growth that they have set for themselves for Q4 FY24. We also have a positive commentary coming up from Max Life, because growth is specifically driven by the focus on Axis Bank segment. And lastly, if we look at Bajaj Life also, the new banking partners, new ULIP and PAR variants are some of the products which are supporting this kind of strong growth. So all in all, we can expect this momentum to go ahead, but we will definitely keep an eye on these companies and see how they perform in the coming days.
Okay, Gaurav, thank you so much for that. But with that, we're absolutely out of time on this edition of Market Cafe on ET Now. So it's a goodbye from Shreyansi, myself, as well as the team who put this show together. But don't go anywhere, because we do have a very exciting lineup coming in on the markets, a full-fledged FMCG discussion. What's the trends there? So don't go anywhere and catch Rama Bijapurkar, Sunil D'Souza as guest editor, as well as Sanjeev Kapoor, culinary icon, who will be joining in with us today.